banking works as simply as this concept that I'm going to share with you. Would you rather keep more money in your business or less money? My name is Carmen.
And I'm Darius. And the idea of keeping more money in your business is something that we can apply to just our everyday life, how we interact with the banks and the overall our contribution to our economy. Because let's think about it, the way Carmen and I utilize our funds, the way you and your family utilize your funds, and the way your neighbor utilize their funds contributes to a bigger picture, which is our economy. And our contribution is what keeps this whole thing in motion. And that's what we need to think of our money, is a way of keeping our economy in motion. This is the oil that keeps this thing going.
Yeah.
And the more lubrication we have, the more smoothly it goes. Now, let's start thinking about this in the form of our contribution using the banks, because we are talking about infinite banking, right? So the very first point we want to make is, let's talk about savings. Savings is very important to our system.
Now, before we get into the rest of this video, make sure you subscribe to this YouTube channel and hit the notifications bell so that you're notified when we post new videos. Now, Darius just mentioned savings being the number one point that we want to talk about in this video. And the main thing that I want to bring back to your attention is what Darius was saying about the economy. So if we think about our household, your neighbor, and your mom and daddy, your brother and sister, each of these individual units make up their own microeconomy, if that makes sense. So when you think about your own economy, our household, your household, how much money do you want to keep? How much money do you want to keep? I'm gonna say that one more time. How much money do you want to keep in your microeconomy?
As much as possible.
And that would be ideal. So when we think about spending and just our everyday financial habits, how much money are you spending that's
going to be gone forever?
That's going to be gone forever. Can we be maybe reorganizing our finances in a certain way that will benefit us to keep more of our money?
Yeah, because let's think about what's really easy for us to do. It's really easy for us to spend money because we have all these reminders and notifications of when our bills are due. Why don't we have that same thing for our savings? Why don't we have that same thing for paying ourselves first? Because that doesn't help the people who you are giving your money to. It's best if you don't understand your finances, because then you'll rely on someone else. That person you rely on is who is going to benefit the most from your hard work.
Yes, and Darius just came up with this breakthrough, which is amazing because, again, we get the reminders all the time, pay your minimum payment, or, oh, now you have 2,000 points because you spent $3,000 or whatever it is. It's sexy. There's more engagement in your credit accounts, for example. But the bank is not calling you to say, hey, it's been the 10th, Darius, you didn't put your deposit in the savings account. And the reason why? Because you don't have to, because they'd rather you use your credit card and pay them interest time and time again.
Yeah, because they'll rather be able to keep more money in their business than money going out. And by you saving money, it's a small amount of interest, but it costs them more money in your savings account than it does in your checking account. So by you saving more money, it costs them more money. Now, when you spend money, which means you borrow some of their money, that means you are making them more money. So their business is growing because they're able to keep more money. Now, if we start positioning ourselves and start thinking that exact same way, then maybe we'll start taking more action in saving money and paying ourselves first, because the risk associated with paying ourselves first is minimum zero in comparison to when it comes to borrowing money that we don't have.
Yes. Now, when Darius said that it costs the bank more money to keep our money, it's because they have to pay us interest. Right? So if you put your money in the savings account, although the banks these days aren't paying much money, they still have to pay you a certain amount of interest for keeping your money in the savings account. Whereas on the contrary, if you use a debit or if you use a credit card, you're going to make money for the banks because you have to not only pay the principal back, but you have to pay the interest. So that's the difference. And that's why there's more emphasis on credit and having all these amazing cards with these points, because the banks are going to make money. And that's why savings accounts aren't advertised. When is the last time you've seen an advertisement for a savings account?
As you were saying that, I was thinking that I've never seen a commercial saying, save your money, pay yourself first.
Yeah, I was
You're
just
not
thinking
gonna
about
see
it. I was like, I've never seen a savings commercial. If you have, let us know. So anyways, going back to the point I was trying to make is it's always going to be the emphasis on the debt versus the savings piece. So as bankers, what we are trying to do is just talk to you about the concept of saving, because nobody talked to us about it.
No.
We had to learn through trial and error. And the point that we finally want to get to with this is savings is all about paying yourself first.
Right.
Because we know that the worker is worthy of the wage. So if you are going out spending 40, 50, 60, 70, 80 hours, who knows, especially these days, working to try to provide income for your microeconomy, you know, what are you going to do with that money that's coming in? We know that you have to pay your mortgage, your rent, or your electricity, or your cell phone bill, but do you have any money allocated to paying yourself? Meaning tucking some cash aside and putting it in your savings account? We weren't taught to do this.
No, and because we weren't taught to do it, then the conversation we then had is that, well, I don't have any money left over after I paid all my expenses. And if that's the case, that means you're living within your means, but by this much.
Yeah.
You want to build more of a gap there so that you can have funds set aside that you can pay yourself first, because it's really, really important that we do so.
Yeah. So with what we're trying to do is you're not going to pay yourself after you've spent the money. You're going to pay yourself first and then pay your expenses, because you always want to make sure that you are the very first priority in line to get paid.
Right.
So with the savings, we've hit the nail on the head. Pay yourself first, pay yourself first, pay yourself first. Save your money, because that's less money that is leaving your household if you hold on to it. The next piece of this is, where are you putting your money when you're saving it? Because again, like we said, the banks right now, they're not even paying 1%. So where can you put your money in a savings vehicle that's going to pay you more than 1%? Right. And sometimes we don't even know to look beyond a bank.
Because that's all we know. We've been conditioned to only think about the bank. Now, why has that been the case? Because people with money, I know they utilize different tools. And we can even see on YouTube where people utilize tools differently than what we have been taught to, because they start to think differently about money.
Totally. Yeah. So again, where else can we store our money where it doesn't necessarily have to be in the bank, but we can still reap rewards that are greater than what's right around the corner?
Yeah, and that for us is life insurance.
Yeah.
Now, okay, whole life insurance, more specifically from a mutual insurance company. And the reason why we utilize tools from a mutual insurance company is because of the fact that we get to benefit from the dividends. And the growth in our policy, we don't have to pay taxes on it for a second time. So that is an amazing tool that we can utilize. And a lot of people haven't thought about utilizing this tool because why? We've been conditioned to utilize the banks. Also, there's people that say, well, why not put the money in term and invest the difference?
We're not talking about investing.
We're not talking about investing. We're talking about saving money.
Yes.
If we put our money in term, about 2% of the population actually utilize term. And then you want to wait until you actually have money when you're in your 50s, 60s, or 70s where you can't even buy insurance to pass it on to the next generation.
When you say utilize, he means die. 2% of the population has to die in order for term insurance to pay out.
Yeah.
Just to make sure.
Term insurance is very cheap to the insurance company. It is also a cash cow. So if I had an insurance company, I would tell you to buy a term. But I don't have an insurance company. So I'm telling you to buy what you should be buying, which is the oldest product they offer is whole life insurance.
Now, again, to make sure that we're on the same page, again, we are only talking about savings. So we are talking about a warehouse for you to put your savings. We're not telling you to take your savings and invest it and risk losing it. We're talking about putting your savings in a vehicle that's going to earn a steady yet guaranteed rate of return.
Emphasis on guaranteed.
Yes, regardless of what the market is doing, you are going to earn interest, compound interest on top of that, regardless of what the market is doing and regardless of how you're using the funds.
Now, you said two things. You said guaranteed and then you said compound interest.
Yep.
What exactly is compound interest?
Compound interest, ladies and gentlemen, is interest on interest. So if we break that down a little bit more, think of you 1 penny one day turns into 2, turns into 3. Now you're earning interest on the 3 pennies and then the 4 pennies and then 5. It's the growth. It's the compounding effect of earning interest on interest.
Right. Now, the thing that a lot of people will say is, I can earn compound interest in other places, and yes, you can.
Yes.
The money has to sit there and not be touched in order for you to earn compound interest. Because as soon as you utilize those funds, it's no longer earning interest because it is separated from its source.
Yes, and again, we just want to make sure that we're on the same page. We need to break that down one more time. In your savings account, you can earn compound interest. Mm-hmm. You can earn compound interest in a CD. You can earn compound interest with many different investments out there. But the fact, like Darius said, is in your savings account, in the CDs and in the investments, your money has to sit. You have to park the money, and you cannot touch it in order for you to earn compound interest. Mm-hmm. Now, if we are trying to build a banking system, we're trying to utilize leverage, we're trying to utilize these funds, if I touch that savings account or if I touch that investment, the compound interest game is over.
Right.
So just making sure that we're on the same page. So what we want is a vehicle that we can save our money in, mm-hmm. that's going to pay us the most a savings account can. And the second thing we want is for that environment to pay compound interest, mm-hmm. regardless if we've used the funds or not.
Now, that gets us to our third point, because if we use the funds and we're still earning interest, how do we want to utilize those funds? Mm-hmm. We want to utilize it to make more money.
Yes.
We want to invest it. Now, there's a difference between savings and investing. It's entirely two different things. A lot of times we think about retirement accounts as a way of savings. Yeah. But if we have the risk of losing our money, then it is an investment. It's not a savings account.
Correct.
So when we save our money, we don't have any risks. We're saving our money inside of a life insurance policy, whole life insurance policy from a mutual insurance company, so we can earn compound interest and a guaranteed rate of return. Mm-hmm. And then we're going to borrow those funds so that we can still earn the interest, and then we're going to invest it. Now, the investment piece, there is risk because you have the risk of losing your money. So you have to be really understanding of what you're investing your money in. Mm-hmm.
And one thing that I want to make sure that we call to attention is with infinite banking, if you want to see the compound interest breakdowns, if you really want to see how policies work, then click on the link below to check out our masterclass so that you can understand the full concept and also apply to become our client. Mm-hmm. Now, when Darius was talking about the investing piece of things, what we want to do with this banking system is, instead of withdrawing the funds, what we're used to doing in a bank, withdrawing the funds, and then you never see that money again because it's spent, we want to borrow the funds. Mm-hmm. And the reason why we want to borrow the funds is because we want to keep that guaranteed interest growing. We don't want to disturb the compounding effect, because mm-hmm. we know that when we go to invest that money, we're going to get the money back, or we should be getting the money back if we're investing smartly. And all of that money is going to come back into our policy mm-hmm. from what we borrowed, mm-hmm. plus whatever interest we earned at that point. So all we're doing is creating a big circle, a big cycle, if you want to call this, of a banking system that is allowing us to keep our money, right? Pay yourself first. But when we spend money, it's in the form of an investment so that we can make money. We're not spending money to just spend it and not see it again. The point of us creating this banking system is to spend money with the point of it coming back.
Right. Because let's think about it. We talked earlier about us being in business. Now, what business do we want to be mostly related to? We want to be related to banks or the banking system.
Absolutely.
Because instead of saving money, what they have is deposits coming in.
Yes.
And we want our savings to be like deposits. Mm-hmm. Now, when they earn interest, the interest that they're earning is the interest that you're paying them on the debt that you have.
Mm-hmm. Yeah.
Right?
Yeah.
Now, what we're able to utilize in that step is the interest that we're earning from our life insurance policy. And then the investments that they make are the investments in us, where we get loans from the bank, and then it comes back in the form of interest payments. Now, what we can learn from that is the fact that we can do the exact same thing on our own terms, utilizing life insurance as the vehicle in which we put our savings, in which we earn a guaranteed rate of return, in which we borrow from them and invest our money. Because the banks borrow from us, from our deposits, right?
Yeah.
The deposits that we put in the bank, they're paying us interest. And when they borrow those funds from us, they utilize it to make more money.
Yeah.
So aren't we doing the exact same thing when we're talking about borrowing from our life insurance policy? Even though we're going to be paying them interest?
Yep.
The banks are paying us interest.
Oh, yeah.
So it's the exact same thing, the exact same process. We're just doing it on our own terms.
Yes.
And on our own level.
Exactly. So again, when we talked about the three things, basically we're talking about savings, we're talking about compound interest, and then we're talking about investing at that point. And the whole point of it is, again, just to break down, we're keeping more of our money in our economy. And the only reason why we would go out and spend money is because we want to get it back.
Right.
And we want to get it back with friends.
Exactly.
Meaning interest. So again, what we are breaking this down on a very, very simple, just conceptual level, because what we find is too many people get focused on the interest that you're earning with your policy, the loan amount that you're paying, the dividends, with the company history and all of these things that are keeping you from understanding what the infinite banking concept really is. And infinite banking isn't even the whole life insurance policy, which we find that so many people just focus on. Infinite banking is when you're spending money, what are you doing with it to get it back?
Right.
So every single time that we sit here and tell you about whole life insurance, dividend paying whole life insurance from a mutual life insurance company, any mutual company will work as long as you are working with an agent who understands how to design your banking policy correctly.
And here's how you design a policy. Add some cash value to it so you can have some cash in the beginning, and then the more you utilize those funds, you have more cash that you can use for your system.
And to clarify, when we're talking about a banking policy, we're not talking about just a traditional whole life insurance policy. We're talking about a high cash value policy.
With a paid up rider, a PUA rider,
a paid up additions
paid up
rider.
additions rider.
Exactly. So all this is utilizing the tool of whole life insurance to create a banking system for infinite banking. So once you have your savings, you're paying yourself first into your whole life insurance policy, what are you doing with the funds to bring money back into your micro economy?
Right.
And that is the main concept really that we just want to hit home, because you see we didn't put any fancy graphs on the screen. We didn't do any fancy breakdowns. We just want you to understand, I need to pay myself first.
Deposits.
I need to put deposits in my household. If I'm going to put those deposits, where am I going to put them? They should be in an account that's earning as much interest as you possibly can get and is paying you compound interest, regardless if you use the funds or not.
And that's the main purpose. We want to be able to use the funds and still earn interest. The interest that we're really after is the interest that we're going to create for our business, for ourselves, for our families.
So those two things, check. Where can I do that? With a whole life insurance policy. And the best thing about whole life is the growth that you earn in the cash value year in, year out is tax free. So we're winning all around. Our savings is snuggled up in a whole life insurance policy. There's no risks of you losing your money because there is a guaranteed rate of return. Now you have the freedom to do whatever it is that you desire with those funds, because you're going to borrow them to make more money, to make passive income, to create smart investment opportunities. That is really the banking concept.
That's all it is.
And what Darius was saying is, if we compare ourselves to a bank, what does a bank want? They want deposits and they want loans, because those are the two areas in which they make the money.
And where are they getting these loans from? You and me.
Exactly. So that's all we want to do. We want to create deposits, paying ourselves first, and we want to create loans. Those loans are those investments that are going out that are paying you principal and interest on whatever terms that you decide.
Right. Now, how do we come up with the whole life insurance? It's because the banks are the biggest purchasers of whole life insurance.
He said it.
And if they're making the money, shouldn't we be following what they're doing?
Yep.
That's what we're doing with the whole life insurance, because not only will it work for us, but it'll also be money that will work even after we're gone.
Exactly.
Because banks have been around for hundreds of years, and we can create a system that's around for hundreds of years also, because at the top of every bank is a family or small group of people. Even at the top of our Federal Reserve is a small group. So if there's a small group at the top of each one of these financial systems that we can create, shouldn't we be able to create the exact same thing?
Yes.
Because we're contributing to it, right? Mm-hmm. So why not use that energy and that wit and create a system for yourself?
Yes.
Because right now we are slaves to the lender, and the lenders are the banks.
Yes.
The banks run it, right? Mm-hmm. So why don't we take some of that wit that we have and put it into a system for ourselves?
Yes, and I think right now, more than ever, is a time for us to really own our finances, because as we see, businesses have gone out of business like crazy. People are looking for jobs. Unemployment is ridiculous. You know, what are you doing to control your banking system? Because like I said, it's obvious just by looking on the news that many of us do not have control of what's going on with our finances. Mm-hmm. So now is the time to look yourself in the mirror and be real with what's going on, and figuring out where your dependencies are. If you are dependent on an employer, if you're dependent on whatever in your life, you need to start figuring out where you can cut out the middleman and take ownership of your lifestyle.
Absolutely. Now, one thing that I want you to really, really consider is the fact that you're making money based on a skill set that you have.
Yes.
You're making money based on some type of gift that you have. Regardless of what you think it is, you're earning money. And if you can earn money by getting paid from a business, you can earn money by creating your own. Mm. So I want you to think about how you can be creative with the skill sets that you have, because we all need each other when it comes to how we are able to grow as a human being.
Yeah.
We all need each other. We all need each other's skill sets. How can you utilize your skill sets to create money?
All right, Wealth Nation, if you are ready to continue learning how infinite banking works, check out our next video, which provides all the numerical breakdown.
And check out our freebie below, where we give you a breakdown of 52 different ways where you can own your own lifestyle.
Or someone else will.